And we are live. Good morning, everyone, or good afternoon, or good evening, wherever you are and whenever you're watching it. Um, we are missing an individual. We're missing maybe your favorite person. Adam is
The glue
away,
that
so
holds the
you are
company together is who we're missing.
you're stuck with the children in the house trying to run the
Exactly.
show. Let's see how this goes, Chris.
Yeah.
Um, for those of you who don't know us, I am Huzefa Hamid. I am the senior analyst at DailyForex. And this is Chris. Chris, you want to tell us 8 seconds about yourself, man?
Christopher Lewis been with Daily Forex for 15-ish years or so. I mean, it's been a great run actually. So,
It has.
yeah.
I've watched the Twitter following from Daily Forex grow from like sub 10,000, like 4 or 5,000 when I joined, to now
Yeah.
it's well over 100,000 at least. It really has been a fun ride.
Yeah, it really
Watching the
has.
watching the brand grow, watching the following grow,
Yes.
and launching this, being part of this.
Yeah, this is just the newest thing and so far it seems like it's getting a little bit of traction, which I'm glad because I think Adam, yourself, hopefully myself, and whoever else we can bring in. It's always nice to hear people actually have a conversation about the markets. Unfortunately,
Yeah.
you don't, when you're a trader, you don't have a lot out there to really back your thought process up. So, with that, you have to kind of figure out things on your own, but it's good to have somebody like yourself that has years of experience. If I've only been trading 2 years and you say something to the effect of, I'm worried about the volatility of the market, that might not be something that I'm ready to think about because I just don't know.
Yeah.
So hopefully that's what this fills.
Perspective is everything, man.
Yeah.
It's everything. It feels like a good time to be a trader. Like it feels like there's a lot of things setting up. There's a
Yes.
lot of things about to move. And I don't know about December, but I think the first quarter of next year, there's money to be made.
I agree. I think the biggest problem we're going to have, and let's start with the stock market because that's the market most people follow the most. I think you're right. I think December is probably going to be a lot of what ifs because you also have,
Yeah,
in a few weeks, you're going to
that's the
have
way of putting
volume
it.
drop off of a cliff. So that is something worth paying attention to. There is the so called Santa Claus rally, but most of the time that's done in low volume. So, with all of the questions surrounding the stock market at the moment, um, I expect December to be very choppy. I would not short the market, but I expect it to be very choppy. Um, and I'm the first person to admit I just don't like shorting markets. Um, I leave that to the
Any market
intraday
or just
futures traders.
specifically? Right, okay. You don't like
Specifically,
shorting any market? Okay.
well, no, specifically like U.S. indices, where in indices
Yeah,
in general, they're not equally weighted. So, if you're really going to short
I
that, then
feel.
short Nvidia.
Yeah, that's a good point.
Yeah,
Is that when you're shorting the S&P 500, you're essentially shorting 10% of Nvidia.
yeah,
That's your play.
yeah,
But I feel right now, look, the S&P 500 is in a bit of a no man's land. It's
yes,
in this range that was made on October 10th when China US tariffs became a big thing again. And it made this 250-point range, and the market's just been bouncing around. It popped up above it, made some new highs. It is choppy and messy, and I don't want to quite go so far as saying directionless because I think direction will come out of this.
right.
Um, my lines in the sand, I don't know if this works for you. My lines in the sand are 67, 70, 75 at the top end and 6,500 at the bottom. It's like
Yeah,
box I've got drawn.
I mean, I think 65 to 68 is probably the main chunk of where we're going to be trading. But it is. I'm actually looking at my other monitor at the S&P 500. It is worth noting that we're getting close to that low after Trump went crazy with the Chinese there for a
Yep.
minute. Um, but truthfully, even if we break down below there, the 200-day EMA is all the way down to 6,300 or just a little bit below it. Testing the 200-day
Yeah.
EMA would not be the end of the world. um, especially if you do it in December because not as many players are in the market. Really, what you need to see is how people behave when we come back for the new year. I think that will be a big tell. The next couple of weeks will
Sure.
definitely be trading, not investing. And those are two different things.
Yeah, yeah. Unless, or as well as, if there's a nice big dip and people want to get back into some
Right.
long-term buy and hold position,
Right.
get that kind of
If we
10,
if we get a
12%
sudden flash
correction.
crash, that's a very real possibility.
Yeah,
And as I'm sure you're well aware, the behavior of the market when we get flash crashes anymore is very violent because it's all algo driven. There, I know some people who use algos that if the market dips 10%, it buys a certain amount. If it dips 12%, it buys a little bit more. Eventually that adds up. Eventually you start to talk about real money. It's not like in the past, 20 years ago, when you got a big massive sell off, there was a time where people just kind of, what do I do? I want the rest of the market to move before me. And now the machines are just coming in
yeah,
saying S&P 500 down 14%. That's a bargain. Time to start buying.
yeah,
So you have to
yeah.
adjust your like look at April of this year, how quickly that turned around. You literally had I'm looking at the chart right now in the S&P 500. You had about 36 hours to get serious. You had a little bit of a pullback 3 or 4 days later, and that was it. We were off to the races. When we fell apart in 2008, I seem to remember it being more like weeks upon weeks of building up confidence.
That I had a look at the chart the other day. That 2007, 2008 time period, like from the peak at 2007 to when it came back to like a break even point, it was a solid 5.5 years. There was like 2 years of dipping and a two,
I
it
know.
was so drawn out in quote
I
unquote
know.
normal. That feels like a normal bear market now. It feels like that's how bear market should be, quote unquote
Yeah.
should. A big
Yeah.
word
Bear
should.
markets now last about a week and then we're right back off the and I would say this to the traders out there: when you look at something like 2008 and you think, oh my god, I should have bought, well, therein lies the challenge. If I knew
Yeah.
then what I knew now and were a bit braver, I probably would have retired about 2015 because you would have just piled everything you owned into the stock market. But that's not how the game
Yeah.
works. You know,
I will say this: as we speak, there are stocks in the S&P 500 which are trading at single multiple PE
yeah,
ratios, like 5, 6, 7. And
there are
I
a lot of
think
them
they've just
actually.
been, yeah, they've just been overlooked because AI and companies like Nvidia have just crowded out the attention. They've sucked the oxygen out of the room, rightly or wrongly. But there's so much attention there that all of these small. I think if there's a big reset in the market, I think there's money, there's gold on the floor in
Yeah.
these individual stocks. If you're willing to do the work, the research, go down into these. I won't call it bottom fishing, but like
Well, it
go down
really
into these.
isn't bottom fishing a lot of the time. It's just abused. They're like abused animals. I mean, they're like, what I mean? People have beaten some of these
Yeah,
companies down, and it's of no fault of their own. Their biggest problem is they are not artificial intelligence driven. But there are plenty
yeah.
of companies out there that will continue to thrive. You just have to look for them. I think the whole AI thing, and we've talked about this before, it just feels like 2000, maybe
Oh, it's got those vibes written all over
1999.
it.
Yeah, just that it's
Yeah.
like, yes, it's going to be a great game changer, but the expectations are probably 10 years ahead of the reality, I think.
Yeah. And
Yeah.
even good companies like Amazon was beaten in early 2000s. Its stock was beaten down 90% at one
Yeah.
point. Like
Yeah.
even the good companies will be pickups.
Yeah, and
What,
my plan honestly with the AI is if it does crash like that, I'm going to buy them like the top 10, and a couple of them will go under, and that's just the way it's going to be.
yeah.
But the ones that take off, I'll be cashing out at 90, for my grandkids kind of thing. Um, But we'll see. I think we both agree, though, December's going to be very volatile and choppy, range bound,
Yeah,
frustrating. Probably frustrating would be a good word too.
yeah,
Um,
yeah.
I
That's,
mean,
that's an excellent word. When I look at the daily chart on the
yeah.
S&P 500, I think that sums up my emotion.
Well, yesterday I'm not even sure what happened. That would have been Thursday, the 20th of November. I mean,
So
th-
yesterday, Nvidia's earnings came out. Um,
they were
Nvidia's
okay.
earnings came out. It beat expectations. It opened on a high, and then it spent the day selling off and made a nice
Yeah,
big chunky red bar, and it closed slightly below where it was before the earnings came out, and that was
yeah.
a mildly bearish sign for me because it beat announcements and it ended up closing lower, apart from the high of. But
I
it
I
isn't just this. Yeah,
I read something about the numbers didn't seem right because all these AI companies are starting to recirculate cash, buying off of each other, and then it becomes part of sales, and then it's a big
yeah.
circle. I mean, I don't know what your thought is on that. Hopefully, that's what brings it down because I'm going to buy it all someday.
And I'll say one thing about Nvidia. Nvidia to me are the only. I mean, they are selling actual things.
Right.
They're selling actual chips, and AI will. They. I believe. I personally believe AI is here to stay, and AI will
Agreed.
expand into our lives, and that means AI will need infrastructure. And the companies that utilize AI profitably, I have no idea. I have no idea if it'll be OpenAI or some
It's
company that
easier to
hasn't even been
buy.
founded
It's
yet.
easier to buy the guys selling picks to the gold rush.
Yeah, exactly. Yeah,
I
that's
mean,
exactly.
this is
Yeah,
this is Levi Strauss. This is the pick manufacturers. This is, all of
yeah.
those companies that made that happen. So we know that the stock market's going to be a bit choppy, and we would be definitely, I think, making a huge own goal if we don't talk about Bitcoin. Any thoughts on that? Because
You and I, what we're 3 weeks in, and we were like, Bitcoin's going down. Watch it break 100. I know this is not a signal service.
no, 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 no.
It does turn out, Chris, that it looks like you and I know what we're talking about when we have a view. But Bitcoin to me is just it's
Oh,
beautifully textbook. The topping pattern it made, it couldn't have been more textbook. I want what did surprise me is when it broke 100K, it didn't pull back and retest it as a
mm-mm.
resistance. That's
No,
how
not at
weak it
all.
was. The
That
bottom
is
just
not a good
fell out.
sign. Yeah.
Yeah, there's
I'm looking at the chart right now. It looks like it just about touched 80,000 this morning. It has bounced a bit. It's bounced like $4,000 from there, and that seems good until you look at the rest of the chart. To me,
yeah.
Bitcoin looks
I mean,
horrible.
there is nothing going on in the chart until like 75, and then below that it's all the way down to 50.
Yeah.
There's just these big wild gaps on the chart, and it can really easily, like you've always said, man, there's no fundamental reason Bitcoin couldn't be zero.
Yeah.
And without that, it can trade through those levels on emotion.
And as our podcast hopefully gets bigger, I'm sure the comment section is going to catch on fire every time one of us says something like that. But the reality is, you're starting to see, um, I think, a lot of questions asked about, put up or shut up. Um, Bitcoin has all of this promise, but we haven't really, I live in a metro area of about 2.5 million people. Um, I don't know where I can spend it. It used to be that they were talking about that as a form of money. I mean, I'm sure it's possible, but I don't see signs that say Bitcoin accepted here. And as a merchant, how can you, if I sell you a home, I'm already down 30% because I took Bitcoin, or
You
whatever.
look at the institutional guarantees, the institutional confidence that populations need in just regular currency. You need
Yeah.
not decades, but centuries
Yeah.
of governments, central banks, Federal Reserves, policies, just so you and I can spend our dollars, Canadian, US, British pounds, whatever, and know that we can buy potatoes or pay our rent or pay our mortgage or whatever we've got. What you need to allow a currency to function. Just a regular currency, Bitcoin is nowhere near that. It has nothing
Right.
like that.
Right. It's supposed to be a store of wealth. I don't know. It doesn't look like it's doing it right now. But having said that,
Yeah,
you and I both know that there's going to come a point where it goes vertical again. It just seems to be what it does. My
yeah.
question is the institutions got involved. BlackRock has, what is the IBIT, I believe it is, the ETF. That was supposed to be a great thing. And we're not really seeing that pan out yet.
I think even at that level, I think there's a bit of FOMO.
Yeah.
And there is a level of acceptance that Bitcoin as a tradable, I'm going to use the word asset very loosely, as a tradable asset is here to stay. So if you believe in any form of digital currency, and there's going to be a significant portion of the world that does,
Right.
um, Bitcoin is the one. And from
Yeah.
that point of view, if you are in the business of facilitating trade of financial assets, you can't not have a product that facilitates that. And I think that that's what it is from their
Well,
perspective.
and let's be honest, Wall Street saw an opportunity to sell ETFs to people.
Yeah,
If you and I own a widget shop and there's some new widget that is the widget to own, you and I would be fools not to offer it, you
yeah,
know? So I
yeah.
think that's part of what happened. But I also think what's interesting is a lot of the Bitcoiners are getting a real lesson in fundamentals because Bitcoin is far out in the risk appetite spectrum. And now that so much of it is owned by Wall Street, I keep reading online how it's being manipulated. And it is being manipulated in the sense that institutions are paying close attention to rate cuts and rate cut expectation.
Yeah.
Bitcoin is a risky asset in an environment where money's tight. Money doesn't fly off the shelves to things like this. And I think that's part of what's changing too.
I'm dying to repeat what you just said because I just want to underline it, bold italics, highlight it. Bitcoin traders are getting a real lesson. And I'll just put a period after that.
Yeah.
They are just getting a lesson in how the markets operate.
My expectation is that Bitcoin is going to evolve into a risk appetite ETF. I think that's going to be a big part of how it behaves.
Yeah.
You know, because the
Did,
stock market isn't collapsing, but it's not behaving well. So if you're having trouble with Coca Cola, IBM, Home Depot, whatever, and you're having trouble getting your hands around that, Bitcoin is not you're going to be your savior, nor will Ethereum or any other altcoin. It's just too new. It's just not proven its worth yet. It would be
yeah.
different if we were seeing even 5% of the transactions being done in Bitcoin would be huge, but we're just not seeing that. And I live in a high tech society type of. There's a huge campus here that is all about tech. Like I said, I don't know. I don't know a place that accepts it. I'm
Yeah.
sure some do, but they don't advertise it.
You got to remember, Bitcoin's volatility is four and a half, five times more than the stock market.
Yeah,
And pay? Would you be able to pay your bills in S&P 500 units? No,
right.
no. The freaking thing goes up and down too much. Why would you on earth would you do that with Bitcoin?
Well, and institutions don't like that volatility. And that's the difference between a Bitcoin bro and a guy who's sitting at a trading desk for JP Morgan or whatever because his job is on the line
Yeah,
if he takes a 40% drawdown on $2 million investment. You know, it's not the same thing.
forty
It's not
percent,
YOLO.
and it's 40% often leveraged.
Yeah. And that's the other part.
The one saving grace I would say for Bitcoin, and this is outside of our purview as traders, but the technology, the blockchain technology that had to be invented to make Bitcoin happen, I think that will
I think
be
that's
the
important.
massive silver lining
Right.
for like information transferring, record keeping, all of that. Really allows civilizations to function.
Right. And I think the real winner here eventually becomes blockchain. And then the question is, what we haven't seen yet, I think of this some ways like phone apps, like the App Store. When apps first came out, we didn't really have that one killer must have app. So right now, we don't have that one killer must have app or function that uses Bitcoin. I think eventually
Yeah.
somebody will find some way to do something much better that uses blockchain. I'm not even saying Bitcoin at this point.
But it's there,
That
man.
becomes
It's like,
standard.
so in B2B, in supply chain management, like blockchain type technologies are being used now in
Right.
government record keeping, they in moving health records around, that kind of thing. Um, it's become a thing, and it's becoming better and better. We don't see it as consumers,
Right.
but in the B2B world, by the time we buy our car or buy a whatever, all the thousand components, blockchain technology has been it's been used to help track the movement of all these random bits and pieces across borders and manufacturers, etc.
I agree, and that I think is where the real value is.
Yeah.
We're even starting to see signs of some of the original Bitcoin holders bailing out. There was a big story the other day, and I can't remember his name, but he bought it. He bought 11,000 for under $1, and he cashed out. And everybody is, what does he know that we don't know? And the answer is,
Yeah.
he knows that he has $1.3 billion. That's what he knows. I mean, if you had $1 billion that you invested, maybe let's just say $9,500 to get there. I mean, at the very least, you're going to cash in some of it, I would assume. So there's a lot of weird
Yeah.
emotion in Bitcoin right now. And I really think it comes down to interest rates and just overall risk appetite. It's poor. It's if the stock market was going straight up in the air, then Bitcoin would be grinding much higher. But it's not. It's
Yeah.
struggling at the moment, and there's a lot of questions to be asked. So my question to you is, what do you think about rate cuts, specifically the Fed, but maybe the Bank of England came really close, which is interesting to watch. And that, of course, has had its influence on the pound. So, what do you think about rate cuts right now, or just the rate situation?
I am a terrible predictor of rate cuts. I'll
Yeah,
say that's my disclaimer. But it's always rates are driven ultimately by central banks because from an inflation perspective, what's
right,
inflation
right,
going to
right,
be? How sticky is it going to be? And there is this sense that even with a even if economies weaken, there is an underlying stickiness to inflation because there just isn't that fluidity of movement of goods and services internationally that's helping just give an underlying layer of inflation. And I think that's making banks, central banks, governors tepid to make another rate cut and then having to play catch up if inflation
right.
pops. So I think they are on the cautious side of the meter. And then they're balancing political pressures.
Well, and then on top of that, the U.S. government didn't release data for ages, so that doesn't help
Yeah,
either. But they
yeah,
did release the jobs number. I think it was yesterday, and they weren't great, but they didn't exactly fall either. It didn't get worse, and I think a lot of people are hoping for that bad news so that we get the cheap and easy money. The problem, I think, is, and I really sympathize. I'm not a big Jerome Powell fan, but I do sympathize with him because number one, he's got a boss who calls him an idiot almost daily,
yeah,
publicly. On top of it, no matter what you think about the president, that doesn't make your job any easier. Just leave it at that. And I'm not a
yeah,
fan of his, but he has to thread the needle with sticky inflation in the United States, um, home prices and big purchases becoming difficult. But at the same time, we have so for example, the city I live in has a massive college. The population's about 75,000. So I see these kids all the time and they are just buying and buying and buying. There's always a line around the corner for Starbucks. And okay, fine, Starbucks is a $6, $7 purchase. But when everybody's doing it, it just shows you how, at least in the States, people just won't stop spending. So I don't know how the rates come down drastically, uh,
Yeah.
because it's only going to kick off inflation even further. It's the only thing they can do is cut rates or keep them where they are. They can raise rates, but that's their only tool. And I think we have an
It's
actual structural problem at the moment.
it's such a blunt instrument. It is a
Yeah.
horribly blunt instrument. Um, yeah. I want to go back to something you said earlier about people talking about the guy who is bailing on Bitcoin, because I'm also seeing a parallel in stock markets where people who normally don't talk about the markets being overvalued, undervalued, whatever,
Right.
are talking about it. Like Jamie Dimon, the CEO of Citibank, came out. Um, Google CEO Sundar Pichai, I'm going to butcher his name, came out and said AI assets are overvalued. You've got Michael Burry uh, shorting. That's a little
Yeah.
outside. That's a little more
I
black
mean,
box. He's got a
yeah, no,
timing issue.
right.
Yeah, I think directionally he's on point, and
Yeah.
he's always got a timing issue. And then you've got obviously Buffett just continuously sitting on hordes of cash. And that is an interesting moment when I for me, it was Google CEO talking about it and Jamie Dimon talking about it in the span of a month. Two
Right.
names I wouldn't have thought had a commentary on the valuation of markets.
Right. And it's interesting because they both benefit from the market continuing to go higher. Um,
Yeah,
there was somebody else, and I can't think of who it was now, that said, it might have been Jensen Wang, actually, who said something to the effect of AI is, the expectations are far ahead of the reality. Or they were saying something to the effect of most companies don't make their AI is a net loss for them. Um,
yeah,
it, in that sense, at least at the moment, it almost reminds me of Y2K. I had a bunch of friends who were in the IT world, and I would ask them, what's going to happen? They're like, nothing. So you're just charging $400 an hour to change a couple digits in a program. Yeah. Well, why are they paying you? Well, it's the thing at the moment, and I like some of these companies that you see out there. I don't even know why they're using AI. Like I don't know,
yeah.
like there's apps for like lawn care services that use AI. To me, that's a huge stretch, to do, so that you can call and you want to get your lawn cut and you don't actually have to talk to anybody and it will schedule and all this, you
Come
know
on.
yeah. But the
Yeah,
reality the reality is I do think AI is going to be very interesting to watch, because if you see it, I've got a couple teenage boys. They actually want real connections. They're the exact opposite
yeah,
of the millennials with
yeah.
Instagram when it came out and stuff. So I think AI will have its place, but the more I watch it, the more I increasingly believe that AI is going to be in the background, and that's not a bad thing. But I think it's not going to be robots controlling our lives like everybody thought a year ago.
You know, I think everyone should read a guy called Gary Marcus. He's an AI skeptic. He is a computer scientist. He's not an AI skeptic who doesn't know the field. He's been involved in the foundations of AI, and he produces a an old school Substack blog kind of thing. And just occasionally, there's a free subscription, and they're long ass reads. They're not easy to get through, but once in a while, I'd recommend anyone reading one of his pieces. He talks about the structural issues with AI and how LLM has been overblown in terms of what it can do and can't do. And he's been such an accurate predictor of its pain points. And I, I look at him and I look at someone like Sam Altman, how different their personalities are.
Yeah.
And it's fascinating how Sam is just like, yeah, we're going to spend over $1 trillion, even though we make like 30 billion in revenue.
they're already
Um,
asking for money from the government, so there's that.
yeah, yeah, and I think it's time to just hear the skeptic voices out.
Yeah. So, rate cuts, we think it's inflation's going to be a little sticky. So
Yeah,
maybe I think the U.S. is going to have the hardest time to cut massively. I think there will be a cut or two, but then I think there's a pause. Um, a lot of other countries, like Canada, has already cut multiple times, so they're already there. Um, England,
we had such jacking up. Yeah, go ahead,
yeah,
sorry, man.
well, I was just going to say England almost cut last meeting. They're probably cutting the next one. Um, that could, in theory, make the US dollar stronger over time because I do believe that the trajectory and the rate cut odds for the next meeting have gone from like 85% to 35% in the Fed funds tool that CME produces pretty quickly. So I think you've got a situation where, and I haven't looked at it in the last couple of days, but I think you got a situation where people are like, well, maybe they're not just going to cut to zero. I don't think Powell wants to do that.
There's just too much bad taste from the last time we did that,
Yeah.
and having to
Yeah.
then because it's not sometimes it's not just about where the rate is for consumers; it's the speed of change, and that's
Yeah.
what in Canada what happened is the next thing you know is people's mortgages have doubled and tripled, and people were having to use food banks to be
I
able to
have
make their mortgage payments.
I have friends in the greater Toronto area that have I have a friend in North York and a friend in Etobicoke. Both have inherited houses from their parents and they can't sell them. And the reason they can't sell them is because they can't find a place to live afterwards.
Yeah,
So they're just kind of, I mean, luckily for both of them, they're very nice places, but if they were to sell their homes in Toronto, they literally would probably have to leave the city. They might have to go to
yeah.
Sudbury
It just
or, wherever. It's
it's
just,
not a yeah.
and it's insane. It's insane. It's the same here. It's the same here in the States. So it's difficult. It'll be interesting to see once the boomers are all gone what Gen X will do because there aren't as many of us. So, economists like to talk about the millennials, but there is a group of us in between the two. Um, I do know that
That's awful.
a lot of the cities are getting to be too expensive, and that seems to be really true in Canada, like even more so in the US. So, with
You had all these cheap places outside of the Toronto area, like Peterborough and Hamilton,
right,
and they used to be cheap. They used to be
right,
dirt cheap, and now they've just been people
yeah,
have moved out and got the
yeah,
prices.
yeah,
Yeah,
and so like the trick to Canada is you have to go to a town, I believe, and I spend a lot of time up there, um, that is small. I mean, I don't know how you buy a place in Montreal, Toronto, Quebec City, Vancouver, I understand is just as bad. But a small town like Sudbury or Thunder Bay, Ontario, maybe. But then there's the
no,
employment questions.
exactly. And there is so much more back to office orders.
Yeah.
You can't
Yeah.
just move out there like you used to be able to.
So
And
with the
there's
stick,
just like yeah.
no, go ahead. Go ahead. Sorry.
Sorry, and there's also we've got to remember these are human beings with lives, and like,
Right.
do they want to live in Sudbury? Do they want to live away from their parents or their families or
Right.
whoever? Do they want to send their kids to school there? Do they want to be in a place where the hospital is small and they have to share an anesthesiologist with the
Right.
neighboring hospital? You know?
Right.
Yeah,
So I think we have real problems, and I do think that across the oceans it's even worse. I think North America is still somewhat, I don't want to say insulated from the rest of the world because that's not the right way to put it, but I think North America is still going to outperform Europe. Asia is an entirely different world. It literally goes from country to country. Um, and the standards of living
yeah,
in Asia are like this. The standards of living in the United States and Canada are about like this. The standards between China and Laos, you're talking like that.
yeah.
So Asia is like a big place to talk about. So with all of that, with the chaos in the interest rate decision, the question is, and this was something that you brought up pre-meeting, we've got to talk about metals. What do you think?
Man, I think so. I looked at the gold and when we say metals, I'm talking about gold and silver. I'm guessing you are
Yeah,
too, man.
yeah, yeah, yeah.
Um, but it is in there is on silver. It's made a solid double top. I'm
Hmm.
going to be really technical here for a second. It's made a solid double top, and I'm seeing gold couldn't reach that second top before.
Right.
It's looking more bearish than bullish, but there's a base between those tops that have to be broken. It's so conditional. It's not just bear out, go short, whatever.
My
But
number for
it
gold
is
is
looking,
39.60, 39.50. We give that up, then there's a good shot we pull back a couple $100, which by the way, I think would be good. I think that's healthy.
yeah,
I don't think that's a
yeah,
silver on the other hand, if it gives up $47, it's going to get ugly. And what I've noticed in silver is even though it did make the double top, the volume is down quite a bit from the first attempt. Gold, on the other hand,
yeah,
at least looks like it might try to fight and get acceptance around the 4,000 level. I'm more neutral on
yeah.
gold. I'm very concerned about silver because I know a lot of people have piled money into it who may not know what they're doing.
Yeah. There's that base around like that 45 region, 47.50
Yeah,
maybe.
yeah, yeah, yeah.
It's just like you've got to really kind of trade through that. But then there's
Right.
nothing until like 40,
Yeah.
39. Like you said, there's just nothing there. It's just a big window of space.
And
And the
there are
price
few
can trade.
markets that will break your heart quicker than silver. Maybe
Yeah.
natural gas. Those are two of the most dangerous, and they have me do both
Yeah.
on an almost daily basis at various clients that I work for. So, um,
There's some
but
good options play, I think. So go ahead.
yeah. No, I was just gonna say I do own puts in
Yeah.
some silver related names in the stock market, but they were cheap puts. I'm not messing with them. They either pay off or they don't. That's how I play this because this thing could rip 7% to the upside too. You just don't know. Um, Silver
Yeah.
just makes
And
me
those cheap,
nervous.
if you've got enough time on your side in those puts, a few months out, they're out of the money now. You got like 8-1, 10-1 risk reward ratios. You got some
Yeah.
fabulous potential there.
So
Yeah.
I think the best way I would describe my view on metals. Very concerned about silver, gold. Yeah, kind of. I think it's going to put people to sleep again because it does that. And that's good. Gold should not. You don't want to see gold go straight up in the air. That almost always means something bad is happening. Um, but silver
Well,
would
they were
be what I
trading in a
would be
range.
really
We're talking
concerned.
about putting people to sleep from April to August this year. It just traded in this
Yeah,
like range where it just did nothing.
it
But
started to
what it
build
did
an
do,
ascending triangle.
yeah, that's exactly what it did do. And it built a really clean resistance. So when
Yeah,
it did break, you could trade off that really easily.
yes, and that's the thing with gold. I think most of the time you need to take a longer term
Yeah.
look at it and be very patient. Silver is just it's just insane. It's wild. So silver just is a dangerous place to live. Most people I know that are truly successful in silver, that's what they trade. They trade silver. They don't trade anything else. That's kind of one of those markets that demands that. So
Can you see a situation where silver and gold trade in opposite? Not, I know the gold silver ratio can vary wildly because they can move at different rates. But can you see a situation where they move in opposite directions? Or
I think
are
we're
they just
st-
too correlated?
I think we're starting to see the real possibility of that. I also see a situation where gold plunges or silver plunges and gold just hangs out in a range. I could
Okay.
see that. I mean, depending on, if silver finds itself at $17 an ounce, then no. But I could see silver dropping $10 and maybe gold kind of hanging
And
around,
gold just holding
maybe a
its
little
own. Yeah,
softer, but
yeah,
not much. I could see that. And in fact,
yeah.
that's kind of what I think will happen before it's all said and done. Um, so what do you think about the US dollar and I guess Forex on the whole?
I think it's broken. There's the DX, the Dixie, the DXY, the dollar index. so 3 times in the same way, will break. It's broken 100. It's it's
Sitting just above the
trending
200
nicely.
day EMA as well.
It's right on the actually no, it's right on the bottom right now of 100.2. So it's
Yeah,
sitting on this resistance. It's sitting on there. I think it'll break it now. I think it's made a nice base over like 6 months.
agreed.
It tried to pop above there at some point. And what that means underlying is that if you've got a trend in the Dixie in the dollar index, is you can start picking off some really solid trades in the majors in euro
Yeah.
dollar in British pound USD. I think the British pound USD is my most bearish play. It's my most obvious play. Period. Right now, it's so obvious to me.
Well, while you weren't paying attention, I got to check it today though. And I'm saying this not to you, but everybody, because nobody pays attention to this pair. Take a look at dollar Swissy. It is
Uh,
approaching the top of a nice bottoming pattern, and the Swiss National Bank has said that they are closely monitoring the Forex markets. And there's one central bank in the world, when they say that, they mean it. It is the Swiss National Bank. I don't know that we break out, but I suspect that if the Dixie really starts moving, this breaks out, the Swiss will have no problem with this. Um, I think the Swissy, the yen, obviously, for a whole host of reasons. The British pound, I agree 100% with you. I think eventually we could find our way to 127 and a half. Um, the Canadian dollar, I think, is going to shrink a bit, but I think it's a grind. And anybody who's crossed the Ambassador Bridge knows that most of the transact, and a lot of readers won't know this because they'll be in places like, Finland and Russia and India. Most of the US dollar Canadian dollar trade is done out of necessity. It has nothing to do with speculation.
which is a
I have
really
sat on
wonderful
that bridge
thing.
for 3 hours waiting for trucks to go through. Um, it's kind of like the euro and the pound used to be when they were all part of the same trading block. A lot of the action was out of necessity, and they people always forget a lot of big US car manufacturers build in Ontario. They need Canadian dollars to pay those
Yeah,
workers.
yeah.
And when they take that money back, they convert from CAD to US dollar. So I think that's one that's going to be, if you want one that's not volatile, dollar CAD's probably your play to the upside. I'm thinking maybe 142 and a half. I'm not looking for the Canadian dollar to collapse here, but I think just a grind. There is an interest rate differential, so you get paid. So it basically behave. I think it's going to behave like the dollar Swiss um, kind of
What was
tends
the number
to.
you just threw out there, Chris? What was the
One
number?
42 and a half or so off the top of my head.
Yeah, easily. Yeah,
Yeah.
easily. Because the
I mean,
next big resistance is 147, 148. There's
yeah,
so much room for it to move there.
and this pair really likes to meander. Even if we went to
Yeah.
148 and you told me, yeah, but that'll be March of 2027, that wouldn't surprise me.
Yep.
I mean, it's not it's if you're a momentum trader, this is not your pair. But if you're
Yeah.
patient and you like holding longer term, then this is your pair in both directions. I've traded it in both directions the same way. You just have to be patient generally. But with the US dollar index looking to break out, I think, like you said, you're going to see it across the board. The New Zealand dollar looks horrible. Um, the Aussie dollar is putting people to sleep again. But if you look at the New Zealand dollar, it's had its clock cleaned recently. Um, today it's kind of stabilizing towards a low, but this thing has basically been in free fall since the middle of September. Um, and I think you're going to see more of that. But some of these other currencies are going to, like the Canadian dollar, as goes the U.S. economy, so goes Canada. So like, I
Yep.
don't expect to see huge. And if you pay attention, a lot of times the U.S. dollar and the Canadian dollar will perform similarly against European or Asian currencies because it's a play on North America. It's not a play on Ontario or Pennsylvania. It's a play on the entire block because
Yep.
there's
Yeah.
the
Yeah.
economies, despite everything we're hearing online right now, are so intertwined that um, the whole argument of the 51st state and all of that. I mean, honestly, Canada is part of the U.S. economy. It just is, and vice versa. Um, So I think you
It's the
need,
it is the most integrated relationship I could imagine.
yeah, yeah. I mean,
Without giving up our currencies, without doing what the
right.
eurozone did. Yeah,
Right. I mean, the for example, it's so integrated that all of the half of the NHL in the United States are Canadian, and the entire Toronto Blue Jays baseball team are either Dominican or American for the what I mean. Like we
yeah, yeah,
and we
yeah.
put
Yeah.
Canadian and American names on it. So like I think that's something that you should watch out for. I do expect North American currencies to do better, the US dollar to do better than the Canadian dollar, but CAD yen will perform just as well as dollar yen, or euro CAD as euro dollar. I think both are going to do fairly well.
Yeah. I'd say the two I'd highlight, British pound USD, and from a chart perspective, it's made
Yeah.
such a nice
Yeah.
topping formation. I think there's money to be made in a long, kind of multi-month trend. I just want to go back to the dollar Swissy for a second.
Okay.
You pull back on like a weekly chart and you look to see where it was in 2011 when the bank like pulled the rug from everyone's feet and just said, "Hey, this is you know
I remember that.
the
That was
way they." Oh
fun.
my goodness, it was it was it was wonderfully amateur hour. It was they did everything a bank should not do when it makes an announcement.
Mhm.
Period. And but you look to see where the price is now and the
Yeah.
spike down back then. They're just matching up. And I
Yep.
think if it makes a base right now against that very long term support, which it hadn't seen in decades and decades, I think there's a multi-month trend to be had. You can just
Yeah.
buy off that base.
And again, they watch the euro Swiss more than the dollar
Yeah.
Swiss. So you got to watch that as
Yeah, that's the
well.
point.
Um, so looking at that, I mean, it's basing as well. So, 85% of Switzerland's exports end up in the EU. So, that makes sense. But US dollar up for me, gold neutral, silver, very concerned. Bitcoin, I think, is going to have a tough few months. Stocks between now and the end of the year, choppy.
Yeah. Unless it makes a clean break of 65, then it could really move down.
Yeah,
Yeah.
no, I agree. I agree. You're talking
Yeah.
about, okay,
Yeah.
Bitcoin.
Yeah.
Yeah.
I'm talking about sorry
Or
stocks S&P 500
stock. Oh,
6500. Yeah,
6,500.
right.
Yeah, sorry.
Yeah, yeah, yeah. I don't know if it will do that. I don't know if it will stay because again, it's like what November 21st. We've got five.
Yeah.
It's just it's this is the petering out kind of phase.
Right.
But if it moves, if the price moves, it moves. And if it moves out that blocky range, it can give us a nice little kick in the butt.
Okay. Well, I think we need to wrap things
Yeah,
up. We're at
yeah,
minute 48. I think we were aiming for 45, so we got there. Um,
yeah,
yeah, I think you're right. I think the US dollar, the stock market I think holds, but like you said, 6,500 is a pretty big number in the S&P 500. So, Bitcoin I just think is going to be lost for a while. Until we start seeing indices rally in a steady, consistent manner, I don't see how Bitcoin continues higher easily.
yeah. And if you've got the access to the instrument to trade it short, like Bitcoin, I don't think Bitcoin I see as a currency pair
You're
in
right.
terms of shorting or playing long. It's not you're not shorting a real asset.
Right.
So if you see that trend develop, you can get in on those like 5 minute or 15 minute charts. It's a nice easy trend.
Yeah. Too much for me though. I'm too old for it.
Do
I don't need more stress on my heart, so there's that too.
you
Okay,
have a
well, I
max in terms of how many positions? You go ahead. You
say
go ahead.
what? No, no, go ahead.
Do you
What
have
did
a
you say?
max in terms of how many positions you keep open at once?
Not really. Because a lot of it's swing trading. So if I have
Yeah.
7 positions on, it's possible they're all a month old, and they're so
Okay.
deep in profit, hopefully, that it doesn't, eventually I move my stops to break even. And I don't even consider that an open position at that point, as far as that's concerned.
Yeah. 7 months old, you should be deep in profit. I'd be very shocked if you're in around the break even mark at 7 months.
Yeah. So, but like, I don't
We've had
start
a good
pressing
run with
buttons randomly. I try not to over correlate either. I try not to do, like I have a bunch of US dollar pro positions, positive, but they're not overly correlated, and they were done at different times. So
I've struggled with correlation. I think that, I mean, markets by definition have some level of correlation. Uh, you've got some outliers like Bitcoin, which can do anything at once based on whatever like random herd mentality that's going on in that area. But I think the only now haven for correlation is individual mid-market stocks and below, where there's a story about that company
agreed.
and there's something about that product that it's going to fly over the next few years. They've embedded themselves in an industry or they have an IP. And I think there's some really great plays, even if the market pushes down, even if the overall stock market pushes down.
Fair point.
Been a pleasure, man.
All right, thanks, man. Good time as always.
Take,
See you.
take it easy, guys.
And remember, if you liked and enjoyed our episode of Pairs of Aces, you can subscribe to Daily Forex's YouTube channel. Please add your questions for the next episode in the comments below.